Ladies and gentlemen of the crypto space, we're live on a Wednesday at 11:42 a.m. A couple minutes late today. Let's get this show started. There's a whole lot going on, and it's all driven by elite policymakers, people with a couple hundred mil in the bank. Don't really worry about waking up and buying whatever they want at the supermarket or going to the high-end outlets, pop by the Cartier store and pick up a $50,000 bracelet. Why? For shits and giggles. Not much you can't do with a couple hundred mil, making a couple mil a year on probably even 2% interest. No, damn well they're making more than 2% interest. You know what I'd be doing in the crypto space, making 30% interest, but yeah, just saying. Markets are teetering. Some serious stuff going on. All hail the FOMC. Bleh. We're waiting for elite 100 billionaires to make policy decisions for dollar bills and fiat and all this stuff that has absolutely nothing to do with anything really meaningful in life. Trying to perpetuate a deprecated, antiquated, fragile system that was crafted the better part of 100 years ago. The only word that comes to mind is pure tragedy. People are going to, let's go over to the main screen. I want to look at stuff. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial, DeFi, or nothing at all. Bam. Let's pop it over to the main screen and see who's in the stream. Winner in trading in the house. Always a pleasure. Heirloom, yes. Igor, yeah. Wave Mappers, what's up? 12 people in the stream. 6 thumbs up. We can do better. All right, so NASDAQ's taking the hit. Dow Jones is up. Dow Jones is, growth, is value, and NASDAQ and tech are growth. Growth. Fuck are these people talking about? Inflated tech equities, 1,000-to-1 P&A. You guys know the deal. You know what I talk about. Value transfers from overinflated to underinflated. Now, that's exactly a perfect example of today. If you got a depreciative NASDAQ and a depreciative Dow Jones, that's exactly what that is. Got the vast majority of the market is underappreciated, underinflated. So when you have a mean regression, a corrective event, the stuff at the top, the stuff that's inflated is going to deflate, and the stuff that's underinflated is going to inflate. And that's basically a natural process to reach homeostasis, equilibrium, part of the great value rotation hypothesis, potentially the commodity supercycle type narrative. Now, really, the only question is the policy-making decisions today, do they perpetuate this hyper growth? And so you could only imagine that the elites behind the scenes are like, keep it going another week. I don't have all my value positions in play. Like the 100 billionaires and the trillionaire families, like talking to the elites in government, like, keep it going a little bit more. I haven't moved around $500 billion. The elite families running around with $500 billion. It takes months to buy up assets, to buy land, and to buy companies, and all that paperwork and legal stuff goes into the legacy systems. Takes 2-3 months to buy a house in New York. Requires a lawyer. That's pathetic. That's seriously pathetic. It's not that they can't do better. It's just that, yeah, that is what it is. I lived in New York, had an apartment and one home. Took 3 months to go through the purchase process. That's pathetic. Anyone who thinks otherwise, or thinks that that's their goal, to experience that system and that's how you purchase a home, that's a horrible, horrible thing to experience. I'm an engineer. There's so many better ways to do things, and we're working in the crypto space. Can you imagine? You have your money, you have 10%, and you have your smart contracts, and you click, and you're the bidder, and then you win the bid, and you buy the property, and you get your title in the form of a digital asset. Dare I say an NFT? You hold it on your secure device. Maybe there's custodial solutions. Maybe you want to take care of your own custody. That's your choice. And you hold your own title. And you own the property. All in a matter of 30 minutes. And these schmucks are trying to tell us that it takes 3 months to buy a home in New York. Most ridiculous thing I've ever seen. And so that's what's going on today. These bureaucrats, these ultra elites, the people that run the system, are going to probably try and perpetuate this short-term inflationary narrative for a period of time, so the wealthy could get their chips into position, and then they will allow the deflationary process to occur. You can't keep this short-term inflationary process going forever. They'd have to print trillions and trillions and trillions more on a consistent basis. Otherwise, the deflation will take over. You can't, for the inflation to actually occur, you need society to be functioning. You need the lending and the borrowing. You need the monetary velocity to go stratospheric at this point. And all the gears, just like we look at bullishness and bearishness in technical charts, the whole system is bearish, meaning it's slowing, meaning the banks aren't lending, companies aren't starting, so companies aren't even asking to borrow, and the banks don't want to take on the risk to lend. So that trends continue until they stop and reverse, and that trend is only accelerating with the layoffs. It's only going to further get exacerbated. So that's deflation. It has to occur at some point, unless somehow they can't print their way out of a deflationary contraction. The system has to correct itself. And that's like, you ever see like 2012 or whatever that, I forget the name of the movie. It probably was 2012, where you had the giant ice hurricanes around the world. When the Gulf Stream was interrupted, the system has to experience the shock event, and then it pursues homeostasis. It heals. It corrects itself. And they're literally trying as hard as they can to perpetuate this shit show. It's disturbing, yet there's a lot of opportunity. We'll look at the crypto space. Anyway, that was a long intro. Sorry. Let's keep it going. The great Dadsby, Papa Bear. Are you worried about government and regulation harming the DeFi lending space? No, I think they want this and they need this, and their legacy systems are pathetic. And every wealthy person out there is like, plug me in. I want to click, 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 and do, versus having to wait 3 days for a transaction to clear, a sell transaction on a brokerage to clear 3 days, or an ACH to take a week, or even a wire transfer to take a couple hours. Every wealthy person's saying plug it in. Chris says, cheers everyone, finally in for some live knowledge. KJ's in the house, my brother, always a pleasure. Welcome. All right. So there's bearishness today. Clearly, we're seeing a deflationary contraction. Anytime you see NASDAQ down and the Dow Jones up, that's the part of the commodity supercycle narrative, value transferring from inflated assets to uninflated assets. Bitcoin is charting its own course, and that's what I see. There's two possible narratives where you have divergent narratives. Bitcoin diverges from all of crypto. It runs on its own velocity. It runs on a completely separate narrative. Clearly, it ties into the rest of the Ethereum DeFi space as a source of equity and collateral for debt positions. But the legacy financial system is looking to it as a place to park immense value. And now that it's over $1 trillion in market cap, it has the potential to absorb hundreds of billions at a clip. No reason Bitcoin can't rip 20%. Someone throws in 200 billion. Whoopie-doo, 200 billion is nothing. So Bitcoin's running on its own railroad tracks. Ethereum is bearish. This is a break to the downside of what was a decent, either a subtle ascending triangle or somewhat of a symmetric triangle. Lower highs, higher lows. But it's bearish at this point if this breaks down. If this closes in 8 hours anywhere below this green line with 3 touch points on the daily chart, it's bearish. But you're going to really sit there for 8 hours and hope that it pushes up? No, you don't run on hope. You make exchanges to be protective, to protect your value. And to me, this is a bearish setup. Whoopie-do, it breaks up and then it goes back in and you buy, whoopie-do, you know, what you really should do is if you were very risk adverse is you wait for a break to the upside, a retest, and then a higher high, and you're buying at $2,100. And that's the way you do it. 20% rip to the upside, give or take, 15%, 10, 23, yeah, about 15, 20%. Stop buying stuff that's going down. People are like, oh, it's going to stop going down. It's going to stop going down. It's going to stop going down. No, why are you buying it when it's going down? No, that's not how you do this. You buy things that are going up. And even more so, you don't just buy things that are going up. Let's pop over to the 1 hour so I could actually draw reasonably. Give me a second. Boop. Boop. Oh, man, I probably didn't want... No, the green ones I didn't want to delete. Okay. So you buy things that are going up, not down. And you don't just buy it just because it's going up. You have to have bullish confluence. So you'll see something rip 20% to the upside. That doesn't mean anything with regard to diminishing your risk for taking a position. Just means it went up 20%. It'll come back down 20%, unless proven otherwise. Unless proven that it just went up 20%, it found a support region, and it pushed higher. Now you have significant data suggesting further appreciation. This is how you protect your wealth. And this is how you grow your wealth. And this is how you take less risk. Now, the vast majority of the portfolio isn't necessarily, depending on your risk tolerance, to be applied to this type of transactionage, selling and buying. Most of it you want to hold for a time period that's consistent with a rational time horizon. Now, the vast majority of my portfolio is like that. I have a variety of assets that I don't touch. Curve is locked. Ren is locked in dark nodes. And that's probably about 25% of my portfolio right there. Yeah, about 25% right now. Cosmos is locked. That thing is validating. Or delegated to a validator? I don't know. I get confused between Cosmos and Polkadot sometimes. Whatever. It's earning interest. Bancor, I'm not touching it. Those things are locked for 4 months. Otherwise, you get a permanent loss. But that thing's up. I think I got that at like 40, 50 cents in March last year, running at 750. Ooh. Synthetics is just a money printer. Check back in 2 years type stuff. Anyway, but Ethereum and 1incher, what are on my plate for being protective and capitalizing on growth opportunities. So this is quite risky right here for 1inch. It rip to the upside, break to the upside out of the falling wedge of sorts. But check it out. Nope. Is it the 4 hour? Yeah, so the 4 hour rejected the 200 SMA, and this 3 minute. Oh, that's actually pretty good. So you know, I had a position probably down here, even lower. Wait a second, I bought down here at the bottom, and I probably sold too late. I wish I got this clip above the 200 SMA, but I didn't. So if this holds actually above the 200 EMA in the 4 hour in 3 minutes, that's pretty cool. Is that Dragonfly? That's pretty cool. I mean, if the rejection of the 200 SMA is pretty risky, but bear in mind this is a long-term moving average on a highly volatile, relatively new asset that's grossly undervalued compared to Uniswap. So what I would probably do this time around is I'd wait for that breach of the 200 SMA, particularly considering the macro backdrop that everything is under pressure right now. But right now Ethereum and 1inch are cash right now. This is not bullish. Ethereum is bearish. Bitcoin runs on its own narrative, clearly, this bear in mind, this is M1 denominated, so change the denominator, as Raul says. So sure, you know, this breaks to the downside through this green line. I'm not going to sit through a 30% dip in Bitcoin. But if it breaks to the downside, probably liquidate maybe quarter, half. But it's all cash. It goes around to Aave, earning 10% interest while it sits. And then you buy back. You look for support. And the way you do that is bounce. Maybe you look for some sort of higher high. You can find support. You can buy on support. Bitcoin's different. It's Bitcoin. All the wealthy people are buying it. Don't you want to be cool like the wealthy people? Wire transfer. If you make the daily cutoff, Brad says, you're making me cringe, Brad. Wire transfers and oh my God, ACHs. Yeah, Bat's doing great. Let's take a peek. I saw it on the top of the chart. Good for Bat. Just because an asset rips 20, 30, 40% doesn't mean anything. Not gonna look, 44%. Good for them. 1.8 bill. Filecoin, 4.5 bill. Ooh, Cardano, 40 bill. Zilla, all right. It's a nice lineup for the 24-hour sword for the top gainers. 1 inch got that 8.3. That was a nice rip. Nailed that one. Polygon, Matic, old school Matic, 33% for the week. It's going to keep appreciating. Uniswap. I mean, literally, Uniswap is an AMM. It has the network effect. It's the unicorn of the AMM space. They weren't the first. Bancor was. And there's no reason to expect that if Uniswap is Uber and the other ones are Lyft, the other ones are going to appreciate. And the whole question is fundamentals tell you where to look, technicals tell you when. And I have that current position locked. It's just producing yield. I don't touch it. I'm okay with it doing whatever it wants to do. I guess I hodl it. Not a fan of that terminology that much. Wow. Wow. The 4-hour candle closed with a dragonfly above the 200 EMA. How do you like them apples? Huh. That's actually quite bullish. But this is a heck of a 200 EMA resistance above head, so this is where I wait. This is where I wait. That was a good play. Costco executive member Noah. Yeah. BAT added to Grayscale ETF. That explains it. Grayscale is going to be buying because corporates are going to be buying. Risk first approach, baby. Well, risk considerate. If you're not bullish, you're bearish. Well, if you're not bullish, you're either bearish or trending horizontal, which means you're not bullish, which means it's not going up. Who cares if something's going down or horizontal? I want something to go up. So many people buy when it's down 20, 30%. They're like, I'm going to buy the dip. No, I can't get behind that. You know, I don't buy dips like that. You want it to go up. Then you look for bullish confluence suggesting it's going to keep going up. Sure, actually, that's the dip. But that's not necessarily the dip. Look, this is where I would buy. Folks would be like, oh, it broke to the upside. It's up 20%, but now it's dipping. So folks would buy down here. But you don't have confluence that it's going to keep going up. You wait for the line. You see what I'm saying? You see? It's a horrible drawing. You wait for the line. You wait for the breach. You wait for the higher high. Get above the higher high, and that's bullish confluence. So buy the dip, sure, after you get the third part of bullish confluence, which is the higher high, and look at 1 inch dipping right back below the 200 EMA in the 4-hour. So bam, you print the dragonfly, and then it dips right back below. So if you're not bullish, you're either trending horizontal or you have bearish pressure. So this is a day to be careful, folks. Powder Monkey, me too, trying to buy 50K curve token. Well, it's a lot of curve tokens, and they're expensive nowadays. Running at 239. That's a major consideration. And just remember, Never go all in, never spread too thin, and you can't overposition an asset in your portfolio. So if you got 50K capital, and I'm not gonna downplay people potentially being millionaires. God bless. But should be a correct position size in your portfolio to show respect to your portfolio. And you respect your portfolio, it will respect you. Don't overposition. Protect the downside. And if you're not bullish, it's horizontal or bearish. So if only you could tell yourself if that's a correct action to make. And I can only encourage responsibility, well thought out position sizes, logical time horizons, and always encourage to respect the portfolio and not take excessive risk. Noah, there are Cardano fanboys calling for $25. Can you roast them, please? Well, here's the thing about Cardano. It's all hype. There's a lot of reason to be excited about Cardano, and technically I'm excited about it as well. But I don't buy breakouts. I buy a retest of support and then the higher high. And I'm not talking about the price action. I'm talking about the project. Sure, the tech is great, and when they get smart contracts, sure, that's quite bullish. That's the breakout. Smart contracts is the breakout. $1 billion in TVL and 100 mil a day across an Ethereum Bitcoin bridge for equity to flow into the system. There's your higher high. And it's not Binance, even BNB, which has a horrible centralized backdrop, has better fundamentals than Cardano currently. I mean, Cardano doesn't have any fundamentals right now other than proof of stake and a lot of other properties that are quite admirable and well deserved and exciting. But there's no money in it. There's no transactions. There's no smart contracts. There's no DeFi. There's nothing. And yes, one could argue that it's on its way, but I'm not going to throw around money speculating. I'll wait for the smart contracts to launch. I'll wait for Cardano to be $2. I'll wait for the dip down and $5 billion of TVL, and that's okay. You don't have to buy on the low. You want to buy when there's bullish confluence. When you're talking about buying a smart, they got velocity going on. They got real monetary velocity. I could argue as much as I want about how much I have distaste for, 12 validators and whatever they're doing from a protocol perspective, and how the entire United States is not legally allowed to access it. So I don't know why anyone really gives a shit about it. In the U.S., it's a big planet. There's a reason other countries should take notice, but if you're a U.S. citizen, it means nothing. Can't use Binance. You can't use Binance chain, smart chain. So who gives a shit? Just saying. So, I wouldn't buy an asset that has just hype, and that's Cardano. It has no fundamentals right now. Smart contracts, 5 bill and TVL, and you got my attention, boys and girls. Do you recommend doing anything with your VBNT? So I don't touch my VBNT. I want you need the vortex and the price of VBNT to go up. So they need to stabilize that debt system. Man, that's really cool debt system. Their monetary policy is exciting and interesting, and novel. Their monetary policy, albeit testing, relatively speaking, makes sovereign banks and countries look just pathetic. I mean, it's cool. Like literally, this is cool monetary policy. Meanwhile, you got the FOMC today, like, we'll think about raising interest rates 0.01% in 15 years, and it's like, really, you can't be a little bit more dynamic, and just the system is just so rigid and antiquated and deprecated. Mrs. Hacker, educate us on BNT, sir. BNT has great monetary policy. All the AMMs that have DAO assets at this point have great monetary policy. All of them are unique. and they needed to do that to differentiate themselves. BNT has good feedback loop. There's a lot of locked BNT, which entails an incentivized supply disruption, which is a deflationary pressure because it disrupts circulating supply. And the burn component will trigger appreciation of VBNT, which will, as people trade and start using VBNT, that means their BNT is locked because you have to reclaim your VBNT just to access any BNT. So that'll further encourage circulating supply disruption. So these are the types of conversations these folks are having at the AMMs about how to encourage value appreciation for their assets. And it's monetary policy. They're literally having their FOMCs, but these protocols actually change on a daily basis. They're actually dynamic and they're adjusting and reacting. Whereas the legacy financial system is just, I don't even know how to describe it at this point. I don't know. We'll see at what, 2:30? 2:30 is the FOMC meeting, and we'll see what the old people have to say. That's what it is. It's just a system run by old people. There's no young person in their right mind would say, yeah, let's build a system, and the way they built it 100 years ago is the way we really should do it. No, you're going to use some new stuff, new tech, new ideas, new monetary policy. Crank it up, evolve. Or follow gray-haired people that, have no vision whatsoever for the future. Tom says, any comments on the Reef Alameda research deal? No idea. I have no idea about it. Larry, thank you very much. I appreciate it. Todd, love the content. I appreciate it. Mrs. Hacker with the starry eyes. 43 people in the stream, 23 likes. We can do better. And look at that. See? You see what I'm talking about, boys and girls? Yeah, Dragonfly Doji above the 200 EMA in the 4-hour. But you didn't have the break to the upside and the retest of previous resistance flip support and then the higher high. And that's looking pretty bloody. So you're either bullish or you're not. That's what I've said a couple times this stream. Stay away for the bullish breakout, the retest of support, and then the higher high print. Otherwise, it just goes down. And that's what we've seen time again with our favorite assets like Digibyte over the years. So what we would have wanted to see is something like this, retest. My goodness, and then the higher high. That's nuts. That's the point. Retest, support, and then the higher high. So you might have to wait 8 hours, 10 hours for a couple of candles for that to happen. But this is not promising. That's bearish. And that's unfortunate. I want to throw down a bunch, but it is what it is. You got to wait. And Ethereum's just below the 200 EMA, and it's below the 200 SMA in the hourly. Let's take a look at the 4-hour real quick. We'll wrap up the stream in a minute. So I mean, on the 4-hour, it's above, and I mean, the 100 SMA is about to have a bullish cross with the 200 SMA, so that's decent. But the 50 SMA is about to breach trend. Unless there's a serious bullish rip, this is bearish. And it's just capital, so you turn the Ethereum and the 1-inch into dollars. And it might cost you, 2%, 3% on slippage. Cost me 2.5% on slippage to exit the 1-inch position, and that was like $5,000. Poof, in the thin air. But the whole point is, when you're bullish and it rips 20%, 30%, and then it goes another 20% and another 30%, that's why you liquidate. You protect the downside and you expose the upside after you have bullish confluence. And then you get into the whole other art that I've talked about quite often on the stream with the yield-bearing LPs. So I do consider that, but this isn't a time to even be in that. Ethereum USDC single-sided, a double-sided pool, non-Bancor style, regular with the dollar protective properties. But the problem is, you go over here. I'll show you guys this, and then I'll wrap it up. 20% on UST. Yeah, I saw it. There's like 30% on UST and Curve. auto compounded APY, throw it into Yearn. Cool. No, I would not touch ANCR. Would you engage in a new? No, I don't touch new. I touch established. And I like Alpha Homora. They had a security incident with the Cream Iron Vault, Iron Bank, and they resolved it brilliantly with some very well thought out procedures. But here, look at this. Look at these yields. Uniswap Ethereum, 100%. What? I mean, you're not going to do 100% because that's farming at 2.5% leverage. I'd go down to 1.5 and be risk considerate. And you'll get 56% on your Ethereum and USDC. So in this type of position, Ethereum, USDC, you're exposed to Ethereum, but you're dollar protective because of the USDC pairing. As Ethereum drops in price, the pool skews toward more Ethereum. People are selling Ethereum, so there's more Ethereum in the pool. So it'll be dollar protective. So you're basically trading the volatility for the yield, 50% yield at the 1.5x. So dollar protective to the downside, but appreciation restrictive to the upside. So it depends on your appetite for risk. Actually, that's not a bad idea. I dipped out of the Ethereum position. Maybe I'll just throw it in there for 50% interest, like 100 chip or something idea. But I kind of dipped out of that, and I'm not necessarily going to do that because I think Ethereum has tremendous potential, albeit if this does what it looks like it may do, that's going to be pretty bad. If it does anything like this, you guys see what I'm seeing, right? You guys see what I'm seeing, right? I'll show you right now what I'm seeing if you don't see it. Yeah, it's not going to be pretty. That's not going to be pretty. And that's when you want not dollar protective. That's when you want full on risk off. When you got a systemic event, when you got an FOMC meeting, and we can have an entire deflationary contraction, that's when you go risk off. That's not even when you're dollar protective. Just saying. Powder Monkey says Reef sent Alameda 20 million Reef for free. Alameda sold a large amount of it. I got it. I want nothing to do with any of this. Although I like Reef and I love Akala and I love Plasm and Dot, one of my larger positions. So, but this is why anything that's new is a great deal of risk, and I'm extremely risk adverse. So, I would never ever buy a Polkadot asset on Ethereum, an ERC20. There's a whole bunch of them that went all over the place at the end of last year. Zero interest. You got a Polkadot asset. I want a substrate blockchain, and I want it to be a real asset. The only one I got of that is Plasm. Plasm block drop. Do like 6 Ethereum in that bad boy. Why not just be long term and leave stuff alone in those LP pools? Yes, now you're talking, and that's a reasonable approach. So if you got $500,000 and you throw it into an Ethereum USDC pool, which is dollar protective, earning 50%, I'm okay with that. And that's pretty good. $500,000. You got to come up with the $500,000. And now you're making $250,000 a year in interest, which is pretty good. But you need a fair amount of capital for it to be worthwhile. I mean, you got 50 grand making 30, 40, 50%, 30, 40, 50 grand a year. All right. Nothing to complain about. Then you got to pay 30% on short-term capital gains to actually spend any of it. Crib is a problem child. Well, they're doing all right. I never played with it, but I keep my eyes on it if there's any interest or yield, or if they do something interesting with XSushi and the XSushi the pairs. They do something interesting there. Any DeFi platform offering sell limit? Yeah, I wish there's no limits to my knowledge like that. Not a sell limit. That what they do. Diversify has sell limits, and I'm sure Loopring does as well. And those are the L2 DeFi platforms, so that's even better. So this is more of a trading experience. What I wish they had was upside buy limits, where let's say Ethereum is 1,500 and I want to buy when it becomes 1,700. That's the type of tool that I want. I want to buy when it goes up. It retests support and breaks to the higher high. So I want an upside limit type functionality, which is very contrarian. Nobody offers it. You try and put a limit order in at 1,700 and Ethereum is 1,500, it's going to click through and buy. And that's unfortunate. Contrarian in that regard. Risk off as in USD stable? Yeah, I like USD stable. So right now I got a bunch of Bitcoin. Bitcoin looks solid. You know, I'm not even looking at it in dollar denomination. I'm going to look at it denominated in M1 money supply, and that's this chart. Oh, it looks solid. It's a nice bounce off trend. Looks good. Ethereum looks bearish with a breakdown below trend. Maybe it'll bounce off the 200 SMA. Maybe get the 100 SMA, 200 SMA bullish cross. Nice. But then, we're looking for the push towards a head and shoulders. And that'll be quite bearish. So this is where I exit. I wait for maybe a re-entrance to the trend formation, a break to the upside, a retest of resistance, flip support, and the higher high, and I'll buy at 2,000, call it a day. See you at 10. And this just turned out to be a good sell where I sold it because this thing is bleeding. Where did I sell it? I probably sold it right about there. I can't even draw. It's the daily, the 4-hour chart. But this was unfortunate. I'm very hopeful for curve in 1 inch in particular. Sushi, it has its it has its place, but what else? Balancer, Kyber, and Bicor. So just be careful, especially today. Be very careful. 2:30 is the meeting. You Google it, FOMC broadcast, and you'll get the broadcast. You watch Jerome Powell completely affect the market, even though he's not directly manipulating the market. He's sure as hell going to either cause the market to fly to the upside or implode in a deflationary crash. And we'll see that. 2:30 p.m. Eastern Time, I believe, to my understanding. Anyway, let's wrap it up. 41 people in the stream, 33 likes. We can do better. Wednesday, 12:20 p.m. I thank everyone for joining. I wish you all a wonderful day. Tell everyone to subscribe, and we will do this again tomorrow. Peace.